Start off, welcome to the joint Board of Selectmen FinCom meeting for 9 December. We're starting at 6:31 and the Board of Selectmen have a quorum. Over to FinCom.
Call the meeting to order for the Finance Committee, December 9th at 6:32 for a joint meeting with the Board of Selectmen.
So Jackie, do you have a slide for the first quick business item on the reserve fund transfer? All right, so in order to fund the search for a new permanent town administrator, we've engaged the services of Paradigm Associates. And to do that, we need to do the request for transfer from the reserve fund. Reading the fine print here. Is that, Jackie, is there actually a motion? This is the letter?
No, Gary, it's just to approve
Okay.
RFT as presented and the dollar value of $11,180.
All right, then I'll make the motion that the Board of Selectmen approve the RTF as written here in the amount of $11,180. That is the basic contract, an allowance of some money for advertising if the town needs to expend it later on, and for if we decide to go forward with it, a public engagement at the end of the search process. Do I hear a second?
Mr. Chairman, I would second it, but I have a question about the $11,100, $180, and that is that they're requesting only $9,000. So why are we doing the $11,000
The contract was $99.80.
or 99? I'm sorry. Yes.
$99.80. So there's $1,200. There is $700 set aside for publications or advertising on the part of the town that's on our bill.
Oh,
And
okay.
also $500 if at the end of the process we decide to have the contractor go ahead with essentially a public forum to go through the whole setup, if you will. But
Okay,
those are add-on costs. So it's the $9,980 plus the $1,200 comes out to your $11,180, which is
Gotcha.
the transfer sum.
All right. Thank you so much.
And Mr. Clemenza?
Yes.
If the additional money is not utilized, it will be returned to become free cash.
Yes.
Okay.
Any
Yes.
comments,
Thank you.
Jack? Questions?
No, I don't have any comments.
All right. So the motion's on the floor. Do I hear a second?
Second.
All right. Then a roll call vote. Jack?
Aye.
John?
Aye.
Gary? Aye. So that passes. And we can move on to the main business.
I'm sorry, excuse me, Mr. Chairman. We do
Yes.
need a vote of the FinCom because it's a reserve fund transfer. So we do need a legal vote of the Finance Committee as well, which is why we're doing it tonight.
All right. Over to you, Jim.
So using the same motion that Chairman Mr. Cheeseman made, I move we approve and support the amount of $11,180 to pay for the consultant for the recruitment process for the new town administrator.
I second it.
Any other comments from the FinCom folks?
None here, no.
Okay, I'm hearing none. We'll take a roll call vote. Hi, Jim.
Hi, Susan.
Hi, Alex.
Hi, David.
Okay, thank you very much. That's four supporting votes.
Thank you for Jackie for keeping us straight there. So Jackie, or who has the current revenue spending update?
That Jamie will give you the FY21 update. It's just a verbal update tonight, though. Jamie, did you? Oh yes.
Jamie, you're up then.
Good evening, everyone. Sorry, I still have my mask on even though I'm by myself. So we are pretty consistent with our numbers I don't have actual numbers completed tonight. I will send that out tomorrow afternoon. We're in pretty okay shape for this time last year. The numbers are consistent. I don't have exact figures with me tonight, but like I said, I'll send those out tomorrow afternoon, latest.
Very well. And perhaps this be a good opportunity too, Jamie. Can you just brief the two committees here as to the status of the coming out of the audit of your reconciliations or catching up from the previous administration?
Sure. So the big find with the audit was that the cash reconciliations weren't being done in a timely manner. And there isn't any procedural, written procedural like a written procedure for office functions in the finance department. So one of a big piece of my goal is to be reconciled on a monthly basis, which that we began to work on. I'm hoping to finish the end of December by mid-January and having the auditors come back and just do like a light audit just to go over the numbers. As far as procedures in the office, we are starting to write down and put into books in writing a lot of the things that we do day to day, as far as payroll and any receipts that we get in the event that we have turnover or someone's not here for reasons like COVID that somebody else can easily pick up and keep going. I think that's part of the problem before. I think there was some type of miscommunication with segregation of duties. We are going to continue to maintain segregation of duties, but there's also things that we can work on together, which we are.
So Jim, I invite you to weigh in here too, but the sense I got out of the audit committee was that we had the deficiency, that they saw that we've already taken corrective action with a dynamic new finance director, and those procedures going to be put in place, that they'll come back and assist us to check on that. But going forward, it looks like we have that correction complete. Is that what the sense you got too, Jim?
Absolutely. I think it's important to also say that the findings that they had, that for 6 months, there was a lack of reconciliation between the cash receipts and the disbursements were never posted in the cash book, and conversely, cash receipts and disbursements were not recorded on the general ledger. Now, when they found that, they meaning Powers and Associates and Marty Croyle, requested an immediate intervention, which was done, and within, I think he said 3 days or 4 days, the reconciliation process was completed for that 6-month period of time through June 30. So it was a significant deficiency, but one that was corrected, and there's processes and policies in place that Jamie's, as you said, Gary, putting in place, and Jamie said the same thing, going forward. And we'll kind of review this, if I remember correctly, in January or February.
I think Powers and Sullivan will drop in January. I think the decision was, once Jamie's got everything ready for him, and that the audit committee would meet again probably in February to review the Powers and Sullivan visit.
I think it's important to say that while it was a 6-month period of time, they found no loss of funds or loss of revenues or misuse of revenues during that process.
Right. Any questions on that? All right.
Just one, if I may. It might be helpful to better understand precisely the process that wasn't followed in a timely manner. Just maybe not in this forum, but as a follow-up, just a brief description of that which should have taken place and didn't, and I guess where I'm going with this is like the implications of this issue, like what it could have resulted in, just for general awareness. I
Right.
think, just speaking on behalf of FinCom, I understand just at a super high level that not reconciling cash is likely to misstate, account balances or, the general ledger or specific department till available funds and so forth. And it sounds like it played out without any major issues in terms of the corrective actions that were taken, but it just maybe as a brief description of like, here's what should have been done, here's what wasn't done, not looking to point fingers, but maybe we could attribute it to whether it was COVID or turnover in finance department,
Yep.
whatever. And
So,
then
yeah,
that's all.
so yes.
I have the same question
Yep.
too,
the
so if it can be
management-
addressed now.
Yeah, so the management letter and the audit is out public view, and that's available. So I think the Powers and Sullivan described the situation quite well. But as you said, Alex, so yes, it was a procedure that had been done and accomplished for many years, including the previous year, 2019. And they said when they came in, they said, why isn't this being done now? And it had not been done for at least a 6-month period in 2020, leading basically January to June. So I think it was attributed to, basically the then interim finance director didn't get done what had previously been done. And so it was recognized by Anthony, and I think the auditors, when they came in there, that relatively quickly that the back work was accomplished. And now with Jamie's assistance, we're putting in the actual written directions to make sure this does not repeat itself. But I would refer you, at Jamie, we have more copies, or we'll have online the actual management letter and the audit, correct?
Yep, I have more copies in my office, and really just to quickly sum that up, what was missing was the treasurer at the end of the month compares her cash book with the movement in and out of the bank accounts, and that needs to match. Then she then gives that to the town accountant, which is myself, and I match that to the GL. That's the piece that wasn't being done at the end.
But may I just interject something? I went back and I actually read the town administrator's report, and the treasurer 3 different times wrote in her report that she didn't feel as though her training was sufficient. So there were flags that went up about this, but they were really missed. And if people had paid attention to the town manager's reports and the contents of individual employees' reports, it would have been picked up, I think. So, and she just didn't seem to have the proper training on that particular software.
Yeah, so it's my understanding that they brought in a consulting firm, and the consulting firm, I think, was the one that had the difficulty with the software, so wasn't able to properly help to what she needed. Luckily, I came from a municipality where I used the same software, so I was very familiar with it. And I've been working with the treasurer now on a lot of the things that she felt that she didn't have training with. I think once I'm here a little while longer, I'm going to evaluate more where I feel that she needs the most help. And then at that point, put something in writing to get somebody in here, a consulting firm in here, but make sure it's somebody that, I can be their point of contact. I can say, this is what we need. And this is where this is where she needs help.
Okay.
If I might interject for a moment, John Clemenzi here. It sounds like there are 2 issues to deal with. One is practice of policies that are not in writing at this time. Is that correct, Ms. Colin?
Yes, it is.
Okay, thank you.
Yep.
How are you finding it, Jamie? Are you comfortable? Are you feeling stressed, or how are you doing with it all?
I think I'm doing pretty good. It's typical sometimes when you have turnover that you see some things that could be more efficient or could be better.
Yeah.
And luckily there's a really good team already here that is willing to learn and is willing to group together to make something, put something, tangible in writing that everybody can see. It's not just, for office, but it is for our office procedures.
So there's some cross-training going on.
Yes,
great.
I think that's important. As soon as I came on, I learned payroll. I think we've all learned pretty quickly that somebody can be out for 2
Yep.
weeks now.
Yeah.
So it was one of the first things that I coming on, I was like, yeah, let's go through the payroll function.
Good.
Let's go through the, very important office functions that we can't go a day or 2 days without doing.
Okay, good.
I should say that both Johnson and Powers and Sullivan, I'm sorry, and Marty Croyle felt very confident going forward that we were on the right track in pulling together the proper training and support and policies and procedures that you mentioned, John, are going to be in place.
Good, great. No, I think you do have a good team there, so thank you for your diligence to getting them up to speed.
All right, Nikki, oh no, Jackie, you have the 22 budget overview then?
Are you?
Yes.
Jack,
Jackie, Jackie Bresnahan has the overview presentation.
Yes, I have the slideshow, but it will be Jamie and I. We've worked
Right.
together, and Tom as well has been going over everything with us over the last few, 8 days. Tom, is it 8 days? Maybe.
Who's counting?
Yeah. So Jamie and I did work on this together. If it's okay with the two chairmans, if we can go through the PowerPoint and then take your questions, and then that way you guys can proceed from your questions that you might have for us into your discussion, knowing that you both committees have meetings next week, as well as the joint meeting with this Hamilton and the schools. It might just be more timely to have us go through the PowerPoint, address your questions, and that way you guys can proceed into discussion after questions. Does that sound good to everyone at this point?
Yes.
That's good.
Yep.
That's fine, Jack.
Jamie, do you have anything you want to lead off with?
So I think for me coming on, this was a good time to start. I like the budget process because you get to learn pretty quickly where we are, where we're going, and what the plan is. I'd say let's just agenda for tonight. Do you want to click back one to the agenda?
Oh yeah, sorry about that, Jamie.
Okay. So we're going to be discussing where we are now, which we touched on briefly, what we can afford, how did we get there, and where do we go from here?
So Jamie did ask me to speak to our current and past budget drivers. She's, as she's coming on board, we're going through what we've seen over the last 3 fiscal years so that she gets to get a good understanding. And for those of you that have been on the boards for a long time, this won't be unfamiliar. One of our biggest drivers is going to continue to be the Hamilton Wenham Regional School District. Partially that in the past has been due to the enrollment shift. We'll hopefully have some good news on that this year, that it's leaning more towards Hamilton. But then we're also being faced with consistent school operating increases year over year. We're also seeing limited revenue growth from our local receipts and from our new growth. We've also seen increases in required spending like our pensions, our health insurance. More recently, we've also seen increases in items like our trash fees. We've also this year had to deal with our response to COVID-19, which has included some changes to our operation, as well as very close revenue tracking. And Jamie and Sherry have been working really diligently on that as they get ready to issue the January tax bills. Past practices, Jamie?
So we've been using free cash to balance our operating budget. There's no significant capital investment or funding mechanisms for future capital projects. No investment in other reserves like capital, enrollment shift, personnel reserve. Habitual use of our reserve fund and state grants to subsidize operating budgets, like legal, trash, legal increases and trash increases, and no significant contribution to stabilization since 2001. DOR and GFOA's best practices are depletion of free cash, particularly if used to balance annual budgets. It can endanger future spending. It's us dipping into our savings, essentially. Drawing down on our total reserves, they can negatively impact our credit rating, which we don't want. We need to maintain a minimum funding level of 2 months operating expenses, which is 17%, roughly 3.63. I think the number, I don't know, can't remember. I think that number is up to date, 3.63. Direct use of all or portions of free cash as a funding source for stabilization projects or for one-time capital outlay. That's what free cash should be used for. Those one-time projects that, that are non-recurring. Moving forward, we'd like to eliminate the use of free cash to balance the budget. No excess levy capacity. We have to use DOR's best practices for free cash spending. And I think that's part of our financial policies that I'll be working on with the auditors and in conjunction with FinCom. There are several policies that we do have in place, but I don't believe they haven't been looked at in a while. So along with our internal processes that we're going to be looking at, we're also going to be looking at financial policies for the town as a whole.
So before Jamie started, she's been with us, actually, it's exactly a month today. We did start looking at our expense increase assumptions that we make for forecasting every year. So tonight in the numbers that you're seeing, we've made some assumptions about our expenses being from 0 to 1.5% for departments. We're also looking at a 2 to 4% personnel increase, and that includes our current contracts. So for all of our collective bargaining units to date, their contracts, the last year will be this coming year, fiscal 22, as well as starting in fiscal 21 mid-year, we will have the new library contract through AFSCME that will be coming online. So this conservative forecast includes the contractual obligations that we already have. It also, at this point, includes a 2% COLA and 2%, up to 2% merit for non-union employees. But we are looking at studying stipends and how other municipalities are handling COLA increases and impacts on stipend positions, because we're one of the few municipalities doing a COLA increase every single year on stipends. We also are looking at at least 4 to 5% increase at this point on pension. We've been trying to get the kinds of numbers that we'd like to see from Essex County Retirement. They have not provided us with an update, but this is where we've been over the last few years in terms of an increase. And as you all may recall, we've switched to Maya Blue Cross Blue Shield for our health insurance carrier, and they're at this point projecting an 8% increase, which is about $70,000 over last year for our employee benefits health insurance. And then we're looking at increasing our contribution to OPEB, $10,000, as we have been doing per our financial policies. And that was something that Jim Powers brought up in the audit report, is looking every year to be chipping away, or at least making some small contribution to your OPEB for future borrowing, future rating. It's good to just show that you're trying to work toward meeting that liability. We also assumed some of the FY22 school budget drivers. We did not assume any increase in the Essex Tech enrollment, but we're projecting at this point a 3% net operating increase. For HWRC preliminarily, we're looking at a 3% net operating increase in our assumptions that we're presenting tonight. We've updated their debt based on the FY21 capital approval that was done at the prior town meeting. We're hoping that the enrollment shift data is coming soon. It's often at the end of October, beginning of November. But from a comment I saw last night from the school superintendent, or excuse me, the school committee chair, it's been later because there's been some changes in enrollment with COVID-19. So we're definitely hopeful that we'll get those numbers soon. But we did have a conversation with the superintendent, myself, Anthony Ansaldi before he left, and the Hamilton town leadership with the school leadership. And at this point, it looks like it will be slightly trending towards our favor this year. So we may not hit as difficult in that we'll still see a net operating increase, but we won't see the enrollment shift impact that we've been seeing the last few budget cycles here in Wenham. And so for those of you, in case you had forgotten, this is what our enrollment shift is looking like over the next few fiscal years. So overall, Hamilton is going down, Wenham going up, but the total district number is also going down, creating more pressure on our percentage. And this had been our additional budget impact over the last few years due to the enrollment shift, roughly $1.2 million over this period of time from 16 to 20. But as hopefully the enrollment shift is trending towards Hamilton, so we may be able to make up some ground. And I think one of the discussions Jamie and I were having in regards to the financial policies is an enrollment shift reserve, so that on years where the impact is trending towards Hamilton, we're putting some money aside so that on years that it swings towards Wenham more intensely, then the impact won't be as steep on the tax rate in a given year. And I know Tom Younger and Joe from Hamilton have been in discussions, and that the joint Board of Selectmen had talked about the conversation with the schools about reopening the agreement. But I think this is a good slide to indicate the impact the enrollment shift can really have on our budget in such a short period of time, the way it currently stands.
For FY22, we have revenue assumptions. New growth, we left at 150 based on recent actuals and current construction projects, and it's pretty static from FY21. Local receipts were calibrated based on actuals, economic forecasts, and state guidance. Our net state aid for FY21 is, the DOR came out a few months ago and said that they were going to, FY21 would be no lower than FY20, so we can at least count on having the same numbers as FY20, but for FY22, we're looking at a 20% reduction. The state themselves have dipped into their reserves to keep us level for this year. A reduction in reliance from free cash from 500,000 for FY21 to 0 as of now, which is great. Free cash levers are going down every year as the town budgets more tightly. The town can no longer rely on free cash to balance the budget. Reliance on free cash only intensifies our current structural deficit. And then allowance for abatements and exemptions, they remain static at 125 based on the senior exemption taking effect in the abatement history from prior years.
And regarding state aid, as you all know, unless there's a change, because based on COVID, the governor's budget is based on coming out by the end of January. And then we will have at least his proposed local aid numbers, which we'll put together as a presentation for you, comparative of how it's been over the past few years.
So you did receive this revenue forecast in the packet you received by email. And for those, if there's anyone watching at home on HWCam, this is now on our website under the FY22 budget process. And I've asked Nikki to update it to the homepage for tomorrow so that folks who want to start following along at home, I know it's a very exciting start to the budget season, always fun to follow along. But this is included in your packet tonight. And as Jamie talked about a moment ago, so we are looking at being very conservative with our local receipts, given the economic consequences of the pandemic and the guidance that we're getting from the DOR. But this just shows you the more specific breakdown of where we got to our revenue numbers. So as a reminder, these are our expense increase assumptions as we get into this next piece. So other 22 additional assumptions in the current wrap up you have for tonight. This doesn't include what we're receiving from the department head budget requests. So we've started meeting, Tom and Jamie and I, with all of the departments. We completed those meetings today, and they'll be visiting all of you on January 9th to provide their presentations, but this doesn't include their proposals if they have anything compelling or new that they wanted to provide for you. It assumes the no COLA for stipends, as I had brought up earlier, and all of the current contracts. The 0 to 2% expense increase assumes all of our town and school debt payments, 3% net operating for HWRSD, and minimal additional aid from the state or federal government for continued pandemic response. Jamie?
So our annual estimated revenue, not including one-time funds, is $21,726,035. Our projected FY 22 appropriations are $22,377,865. That leaves us with a structural deficit of $650 estimated. This is just estimates, and there's no input from department heads yet. We've gone through like the first round of departmental budgets, but there's nothing, no cuts have been made, no talks of anything have been made yet.
And I do want to point out too, this is Jamie and Tom's first time going through these numbers. And for many of you, this is not your first time, but I actually was a little celebratory because this is a significantly lower structural deficit than we've started the year with and we've seen in the past few years. So while still a lot of work to be done on this budget, a lot of time to be spent working with our department heads and with all of you, I think it was a little bit exciting to be this low to start off. It does show only a 3% increase from the schools, which we'll be hopefully getting some better information from them next week on where they're starting their year at and what they might expect for some projections. But I had a little cause to be optimistic with this 650. As folks might remember, last year we were at the $1 million mark for the structural deficit. So we've plugged in fiscal 21. So good to see that we're moving in the right direction of coming closer to a balanced budget closer at the start of the season.
And Mr. Chairman, vote chair, in my historical experience, when you're starting off, you usually end up with a structural deficit in the beginning of the budgeting process. And be honest, my financial team and myself has always hit the mark when we've come back to town meetings. So into the board. So I'm optimistic on the work that we've done so far in the beginning of the process.
Thank you. Free cash here, Jackie?
Yep, so these are the graph that shows what we have had certified for free cash since FY 14. FY 20 is an estimated number. We still haven't gotten our free cash certification. I spoke to DOR earlier in the week, and they estimated to have that certified in January, just because right now they're working on setting tax rates.
So this just shows our tax rate and capacity over time. We did talk about this a little bit last year, but I just think it's helpful for folks to see the tax rate over time, and specifically the tax levy, the maximum allowable levy, and more importantly, the excess levy capacity. Last year, we did talk about how in 15 and 16, we did have some excess levy capacity that was left on the table, and how we were trying to come back from that, particularly given that we can only do our Proposition 2.5 increase every year. And we obviously don't like to put forward overrides unless they're really critical to the boards. But, we are working really hard to rein in expenses where we can. There's some things we can't control for with our retirement and our health insurance and our trash, that it's a hard expense for us to control. And we often see 5, 7, 8% increases. So we're working really hard to come back and, looking within the 2.5% as much as we can in a given year to encompass those costs that are going up significantly more than 2.5%. And as folks might have remembered, we had talked about this where there was excess levy capacity in roughly the area of 2.3 million from 13 to 16 and only 80K in excess levy in 17 to 19. So we've been budgeting very, very tightly. And as you can see, that really shows when Jamie was talking about our free cash a couple of slides ago, we can see really high free cash in 2016 and 2017. And we had left that levy capacity on the table, and we were able to plug that money into the next year's budget. But over the last few years, as the levy capacity has gotten smaller and smaller, it's going to mean that our free cash total that Jamie and her team work to certify is going to get smaller and smaller. So it's just something we wanted to be mindful of in our overall discussion tonight. As you can see, this is the use of free cash and excess and deficiency that we've used in the operating budget. So we had gotten a little bit higher from 17 to 18 to 19, brought it down in 20, and in 21 last year with COVID and the anticipated revenue shortfalls, we ended up only plugging in about $500,000, which is really good news because it does help us lower that structural deficit to be less reliant on those one-time funds. As Jamie said, dipping into our savings account to pay the mortgage was a nice analogy that was used on the audit committee tonight. So you can see that the total free cash used to subsidize the operating budget over from 15 to 20 was roughly about 3.8 million. We had missed that levy capacity in 15 to 16 at 1.3. So that's just goes to show where the structural deficit came from.
Bonding agencies, board members and FinCom members, as you well know, the use of free cash is one of the items that bonding agencies look at when you go out for bonding and bids on your rates. So it is quite important that we limit the use of free cash for operating expenses.
And thank you, Tom, because that is a really good segue, because we did more borrowing now that we've gone out for the Longfellow Road betterment, our iron rail capital. We also have recently done the ban for the fire truck. So we do want to be in good standing for our borrowing, for our interest rates, because that does have a really close financial impact for us year to year at this point that we're in good standing. Interest rates are low, but we obviously want to be able to be in a good position to borrow in the future when other larger capital and building projects come up, even maintenance projects that can get more costly than we can fund in a one-time year. In this chart, we did look at it last year as well, just shows a comparison of certified free cash versus free cash to subsidize the operating budget in a given year. So you can kind of see that comparison of how the numbers are looking over time.
So how do we get to a balanced budget? Revenue increases. We are looking at our recreation agreement, looking to review recreation IMA for Hamilton as well as revolving funds. I think we'd have to put trash fees on the table, a Proposition 2.5 override, and then long-term a master plan. Expense decreases, health insurance review continues. I think that was a change that happened last year or the year before. Planned or scheduled service reductions, increased regionalization of services, and then cost efficiencies based on more collaboration with Hamilton and HWRSD on services and contracts.
Jamie, may I interrupt for a moment?
Yes.
So for both FinCom and select board members, we did talk about trash fees last year. We talked about them at length. I think something that we are not sure what your appetite is for trash fees, or if there's another function for looking at reducing trash services, cutting costs on trash services, or finding other ways to fund trash or at least subsidize trash from where we are right now. So I think for us, we just wanted to put it back on the table as an object for your consideration, because that is going to be a cost that is going to continue to increase significantly year over year. And I think it merits your attention. On the health insurance review, we did switch over to the Blue Cross Blue Shield through Maya, but we're working to still, the pandemic unfortunately derailed our policy that we were working on to increase the insurance incentive to encourage employees to take a spouse's or another family member's insurance, and they would receive an insurance incentive from the town because it would actually be less costly to the town for us to provide a dollar figure to them as a payment every year to pay for the insurance through another provider. So that is something that we're also going to continue to look at this year to help try to rein in those employee benefits costs. And then before Jamie came on board, I was letting her and Tom know, Anthony and I had met with the school leadership and the Hamilton leadership, and we are looking to work with them to see if, Hamilton's also been making some health insurance changes, but we've connected the school district with Maya, with Janet in Jamie's office, who worked with Maya on our transition to Blue Cross through Maya, because there might be some cost savings for the schools in looking at something like employee benefits. And as we know, that's such a big driver for us, and we don't have a lot of capacity in making decisions about what the schools are budgeting. We just get the bill. But we're hoping to work with them on some collaboration so that we can see cost savings in other ways for all three entities that would then, show up in our bill on a monthly basis from the schools in our assessment that cost savings is realized when it comes to our budgeting process with the HWRSD. Tom, did you have something too?
Yes, going back to the revenue increases. I've had experience with trash fees, but that is really a policy decision about how the town wishes to handle that. There's various versions of how you can do trash fees and payments of such. The health insurance, working toward alternatives to get our employees off under another plan is a relatively good cost savings if we can put that together. But the key for increasing our revenues, we're limited. We don't have a really commercial growth. It's basically all residential. And our new growth, I think you were budgeting about 150, I think, right. You would hope to get that number up. I mean, we're early in the process right now, but we are limited. We're a wonderful community, but we're a residential community with few revenue sources that we can move toward besides real property tax.
So for FY22, the budget building process, we're returning to our standard process schedule and asking departments to prepare level service budgets and maintain staffing levels and include any program improvement requests with compelling rationale. Once the FY22 HWSRD budget request levels are established, we will determine at that point if an operating override is likely needed. Department heads may be asked to deliver a second iteration of their budgets to keep within town levy limit so we can understand the impacts if it were to fail. BOS to determine a override policy. Over the next month, we're going to work with department heads on initial FY22 operating and capital requests and refine the town expense needs. All proposals will have an initial review on January 9th. Next week, we'll meet with Hamilton. It's the 5 board meeting with Hamilton, BOS, and FinCom, HWRSD, and then our FinCom and Board of Selectmen to discuss the current status. Budget schedule overview. Operating and capital requests were due from department heads on November 30th. Meetings with department heads have begun last week. Yes, last week and this week they've been taking place. January 9th, it's a Saturday budget meeting. It's budget day where everybody presents their budget to BOS and FinCom. January, February timeline, BOS finalize the direction and complete their review. February, March, FinCom budget review and BOS warrant article review. And then the end of March is the deadline to finalize our warrant.
Well, thank you very much, Jackie and Jamie, for that presentation. Jim, as we got quite a few online here at Zoom, why don't we just circle around and take turns if we have any initial questions. I see Jack stepping away. Let's let John and myself ask questions, and then we'll go through your 4. How's that sound, Jim?
That sounds fine. Just a comment, if I may, Gary, before
Yes.
a question. I'd like to thank Jamie, Jackie, and Tom for teeing this up in a very nice way and kind of leading us down the road of what the issues are and where we stand. I appreciate the effort put into it.
Jackie has been fundamental, especially for Tom and myself coming on new. She's been excellent.
Thank you. All right, so John, you want to lead this off? You got any direct questions?
A little bit at this time. I'm assessing a whole lot of information now. But first of all, I want to recognize the fact that there are some very new personnel here. And thank you so much for jumping in with both feet immediately. And thank you for your anchor, Jackie, because you've been incredibly good for this. Two things that concern me, the schools always have been of great concern. Where they started last year was unconscionable. Where they ended up was much more palatable, but they need to have more recognition that we have a whole town to run and not just one department. The second thing is the trash issue came up again. We had a lengthy conversation about that last year. I think what there needs to be, Tom, is a full understanding of what is going on with trash collection and disposal at this time, what has happened since last year. And I know it may not do anything but go up, but is Casella the only opportunity? I know they're the biggest out here. I think that one needs to be addressed. I do think the health insurance needs to be reviewed as well. So, you know, we've got a lot to work on, and I am more than pleased to step into the arena with anybody at any time and take a look at what we, you know, can do to reduce costs of operation, generating new revenues. There just isn't a whole lot of opportunity there. So I've looked at that for years, and we'll see if there's anything out there. Thank you.
Jack, over to you then.
Yes, first, congratulations to the presenters. Jamie, you got up to speed real quickly. Thank you for Jackie. I'd like to go back to slide 22, if I may. Slide 22.
Yep, pulling it up, Jack.
Well, I think that this is pretty optimistic and aspirational, and that these are nice words on a piece of paper, but I understand the trash fees. Proposition 2.5 is, you know, whatever. Long-term master plan. How are we going to get revenue out of a long-term master plan? I don't understand that. Anybody want to fill me in?
Sure. When you're looking at long-term master planning, and this is coming back to what does the town want to be? And when we're looking at that, is there developmental opportunities in our community under master planning if you're looking from a zoning issue? There are areas that can require different types of zoning, overlay districts and such, that might make it more inviting for somebody to come in and do either a residential project, commercial project, to come in to increase our tax base and take it off of our residents. Generally, that's what master planning is, and not having a situation where a missed opportunity comes by where someone could have come in and worked some type of development, but we weren't prepared for them.
That's all well and good, but we're looking at the fiscal 2000 next year's budget, which begins July 1.
Right, but this is,
I mean, there's only a few months to go, and even if you were able to magically pull off huge progress in that, we're not talking about next year at all, in my opinion.
not at all, Mr. Wilhelm, it's long-term. It's going
Yeah,
down.
long-term.
Yes,
Well, I'm looking at the title. How do we get to a balanced budget? We're talking about next year's balanced budget, not for the next 5 years. I don't want to be too critical. I'm just saying that these are aspirationally. Proposition 2.5 override. Of course, we can do a proposition 2.5 override. What I'd like to see, however, is our current tax rate. Everyone is interested in the tax rate for individual homeowners. And what would this all come out to in a range of tax increases if we got some or most or all of this? I have more comments to make on the expense decreases. So what would be the average resident in Wenham looking at for an increase in their assessment, the tax assessment, and the increase in the tax rate? We're getting up there over $18, per whatever it is, and that so that's getting kind of worrisome. I don't know what you're thinking of doing the recreational IMA with Hamilton as well as revolving funds, but whatever. Let's go to the expense decreases. Health insurance reviews, you should do that every year, of course. Plan to schedule service reductions. Those are nice words, but, you know, I mean, that involves, you know, our specific departments, fire, police, highway. And so I'd like to see some meat put on that to come up with what would be proposed service reductions so people can do it. Increased regionalization of services, that's there every year for the last 35 years. So what do we mean by that?
Jack, if I may.
You
So I-
may, anybody can may, go right ahead.
So I think I want to touch base really quickly on a couple of those. So I think the long term for master planning
Jackie,
is a,
just stick with the last one. Increase regional
okay.
services, please.
So for example, right now, in terms of increased regionalization of services, Hamilton is looking at modifying how they run their Board of Health. So that is an option where they have spoken with us. There may be some opportunities to collaborate on that type of service where we both require public health services, and
Yeah, that's good.
cost savings in moving forward with that as we go through this budget process.
What do you think the range of possible cost savings would be? Perhaps one half of one person or one person?
I think it would be a couple part-time people, but I think, you know, over time, when we have part-time positions and then there's COLA increases every year, that does start to build in our budget over time. So it's a way to get us on track to have good quality of service over the next few years, but keep those costs in check. So as we go through department budgets, we'll talk about more of these.
I understand doing the budget is difficult. I spent 10 years in the FinCom committee. I think in the next budget presentation, however, an increased level of specificity would probably be helpful. I mean, and there's, you know, most people couldn't argue with these, what I'll call some of these aspirational revenue increases and expense decreases. But, you know, by the time we get to be mid-January to late January, I think we need some specific, you know, planned program reductions, expense reductions, which are going to be, I'm sure, controversial. You know, that. So I'm just a little worried that I know it's very early in the budgeting process, and you have to do stuff like this, but I know.
Well, I think, Jack, the other thing that we're thinking about as well is that, you know, we get through this overview so that we have a sense of the numbers when we're going into the meeting with the regional school district in Hamilton. But we also have planned to go to have two other nights, one where we go to a deep dive into our revenues, and then another in early January, mid to mid-January, where we do a deep dive into our expenses after the department heads have made their presentations. So I think the challenge being is that it is a little early for us this year with
Yes.
meeting moved into late May and the state still looking at that fiscal 21 budget. It's been a bit of a challenge to get numbers in advance, but we wanted to get you some conservative numbers to walk into next week's meeting with so that you had some sense of where we were going, given that so many of our things that we budget for don't lock into place until later in January and February.
And I want to go back to my first comment, a second comment. I think that in subsequent presentations, I think we should be letting the taxpayers in Wenham know our current tax rate is X, 18 and change. Mm-hmm. And we're hoping to limit it to Y, whatever Y is, based upon, you know, revenue increases and expense increases. So that, the average homeowner would expect, I think it's whatever the Board of Assessors is saying is the average, maybe it's 450, something like that, to expect a tax rate increase. If you're an average homeowner, all this operational override stuff and all the other stuff like that is not as meaningful as what are they going to be paying next year for taxes. And so I think that to have a target, we want to limit our tax rate to some number modestly higher than what we have right now, would be very appreciated and educational for the average taxpayer in town, who only tunes in on this because they're kind of bored.
And Mr. Wilhelm, and yeah, Jack, okay. And what we generally do, or I've generally done, is when we do the planned reductions, is that we're very specific. It said if we're eliminating, let's say, an assistant building inspector, or if it's eliminating an assistant health inspector, I generally spell out what is going or what the program or the service is going to be reduced. You know, if it's library, you know, we're reducing it by 5 hours a week. So there are specific items that we show versus we're just reducing their budget by $20,000.
Yeah, I think that'd be great to see in the next version, or maybe the version after that. I'm not trying to be too critical of this. I'm just saying that I think it's optimistic and aspirational. I would just like to see, as a selectman, a little more meat in the potatoes about some proposals that I'm sure would be controversial, whether they're expense reductions or revenue increases, so we can debate these.
I have a few comments if I might. Last year, Jack, if you recall, we had, I don't know how many meetings where we laid out on a grid what the increases to the tax rate would be based upon the overrides.
I recall that.
Huh?
I recall that.
Yeah, so it was really, everyone had a chance to look at that, and we should be doing the same thing this year. I did
That was at
pull
the
out.
end of the process. That was towards the end of the process, Jim. I'd like to see if we achieve even half of these revenue expense increases, revenue expense decreases. What would we aspirationally want to hold? I shouldn't say aspirationally. What is our goal of holding the tax rate increase to some specific number? Because that's, at the end of the day, that's what people pay attention to.
Yeah, I did pull out also the study that we did last year on Wheelabrator and the trash collection.
Oh, yeah.
I want to, Tom, it's showing a per household increase and so on, and what we might be able to collect in revenue there. It ranges from $100 per household to $311 per household annually. But there was a good look at that, and the Wheelabrator costs were included that as well. I guess the other statement, other observation, is the fact that we're at 650 without use of any free cash to offset that so far in this budget is a very positive thing. I think the fourth thing I'd like to say is that given that the school budget is last year was 54% of our budget, that will, I agree that is going to be a significant piece of how we get to a balanced budget. And I'm looking forward to working with the schools and seeing what they have to say next week, even if it's preliminary. I do have one very specific question on the spreadsheet of revenues, the iron rail, and we had a brief discussion about this before, is showing $100,000 loss of revenue, 140 down to projected of $40,000 for FY22. Can anyone provide a bit of an update? We had discussions about maybe having more specific agreements about where the iron rail tenants are at and what they've agreed to, or what they can agree to, and whether we can recover. A loss of $100,000 from them is a significant amount of money.
Mr. Chairman, John Clemenzi here. I've been working very closely with the tenants as well as with Lou Randazzo, who I don't know if he's present or not, but he can speak for himself. It has been a very, very tough journey because the key players there all have been devastated by the governor's shutdowns. So they lost probably somewhere between 3 and 4 months worth of revenues almost completely. There appears to be a recovery happening, and we are looking at both the minimum expense of the operation to make sure that we are at least meeting that with the income that's there, and then expecting each one of them to address the simple fact that we cannot forgive these indebtednesses, but what is their plan? So we don't have the answers today, but they're coming very quickly, and everybody understands how clear we need to be with this, and it's just been a very serious challenge. And to lose any of them would be far worse than even handling the indebtedness that has occurred because of the COVID. And I don't use that as any excuse. It's just the reality.
Thank you, John.
But I
John,
have
we
one
considered-
question.
Excuse me, Susan.
Go ahead.
John, have we considered renewing any written agreements or putting new agreements going forward of how they're going to address this?
Yes, that is being considered as we speak. There has been some significant income coming in over the last week or two. I'm not sure if that has been addressed by the finance department yet. So I don't know how far off the revenue may be or less off it is.
Okay, thank you.
But John, at least one of those large tenants has revenue coming in. And it doesn't
Yes.
seem to be making its way to the rent. I also think it's unfair for a couple of tenants to not be paying anything when others have met their obligations.
Yes, got it. I fully understand and agree with you. So we're correcting any issues whatsoever there. And there's the largest, I think the largest one has been applying for an SBA loan. And that is hopefully forthcoming because there's positive income for her.
All right.
I have some follow-up questions too. I can go
Go
after
ahead there,
Gary.
David. Go ahead.
All right, thanks, Gary. All right, so Jackie, just a couple things to go back on too. So the Essex Tech enrollment, has that increased over the last few years or has that remained fairly steady?
The Essex Tech enrollment has remained very static over the last, since actually I've been here, the Essex Tech enrollment, we haven't seen an uptick or a downturn. I believe
Okay,
off the top of my head, it's either 12 or 13 students a year.
okay.
That's
And
very
it don't,
competitive. If I can jump in, that's very competitive. So I don't think you would see much change year to year. So that we kind of get our quota based upon our applicants, but I don't see that's changing much.
okay. And then a couple of things. We addressed Iron Rail. For the healthcare benefits for the employees, there was a plan we talked about last year about paying them not to take our healthcare. Has that gone anywhere or have we done anything with that? In other words, I'll make these numbers up. Say it costs us $10,000 a year to supply healthcare to an employee, but if they can get it through their spouse, we would pay them $1,000 a year. So instead of costing us 10, we would pay them like $1,000 cash. Other companies, public companies do that at times. I don't know if we addressed that at all. It was
So,
discussed
David,
last year.
I want to start by saying thank you for explaining that program in such a lovely way, saving me explaining it.
Yeah.
So over the course, while we were working remotely over the summer through the pandemic, we did develop a policy and we've done costing scenarios. And this was with not with Jamie and Tom, but with our prior budget team. So I think the goal will be now that Tom has transitioned in, Jamie has transitioned in. That's one of the projects that we're going to pick back up. And I'm optimistic that that'll be a policy for the personnel handbook before the select board sometime in January or February. So we can realize that for fiscal 22. So it was something that came up late in the process last year. It wasn't something we were able to accomplish for July 1. But we do have a draft policy that I'm hoping to get Tom and Jamie's feedback on it. And then that way you can go before the select board. So just for numbers sake, for a new employee coming off coming into the municipality, we roughly budget $19,000 to $20,000 for employee benefits. And that's if they take the family package at the most expensive.
Yep.
That's like a worst case dollar amount. So even if someone's taking a package, that's more in like a $12,000 or $13,000 range, offering an insurance incentive that's in the line of $2,500, say, rather than $1,000 is still not a huge cost impact on the municipality because of the savings of that plan, having such a wide gap. So that's what we are looking to do still. The transition definitely threw us off. COVID threw us off, but I'm optimistic that we did take an employee survey at the time. And I do think that we'll have a good I don't want to say half or 25%. I think that's premature, but I think we will have some employees who choose to take advantage of that during open enrollment this spring.
Okay,
I'm actually looking forward to that and reviewing the criteria. To basically, the criteria is important to also protect the town.
okay. I think, sorry, Jackie.
Oh, no, I was just going to say it's really great that Tom and Jamie are coming in because they've both had experience with these types of programs before. So we'll also have the benefit of their experience with that project.
Okay. Two more questions. One is, I think a 3% on the school is a little Christmas, it's
Yeah.
low, because if we go, last year was not 9.7, give or take. So do we have what has actually been in reality for the last 3 years?
We do. And I think, we always try to come in for this first overview at 3%. So we get a sense of where it would be if their increases were in line with our increases, knowing that, there might be a higher increase. And, we've seen anywhere between 5 and 9% over the last few years. But one thing that we are hopeful about is that the teacher contract and the other staff contracts at the regional school district are up this year. So we want to make sure that you have the information of where we currently are in the budget process, what impact our budget is currently at with a 3%, kind of increase on the schools for a net operating increase, so that you're fully informed as to our financial standing. Because next week, you'll have your input to the schools, and the town will have one seat between Hamilton and Wenham on the negotiating committee. So all of those contracts are up, which is a huge cost driver for the schools because most of their budget is salary, particularly the teachers' collective bargaining unit. So we wanted to go low with the 3% as we've done in years past at this time, so that you understand where we already are, even with that amount, as we go into giving, what we can afford as they go into those negotiations.
Those are good points. I think, something that happens in the joint meetings, and we've all been on the committees and doing this for a while, a lot of the times it's falling on deaf ears. This year, I think will be different with the extra costs with COVID. So I think with the 3% is a good start, but I think we have to have a reality in there. So if we take split the difference over the last 3 years and just say it's 6.5%, that's our starting point. Because it's always higher, at least for the last few years that we've been doing it. But I understand what you're doing, at least getting a good foundation. But I think if we do it next time, I think a reality would be good. And the last one I had was refuge trash. I don't think we should ignore it for this year. Between kicking stuff down the curb and what Jack was mentioned, our tax rate, it's already 20, or we're going to be slightly over that. We can't charge more fee than the trash bill. From last time I spoke to Anthony before he left, this was probably around the town meeting, so a while ago, is that people are cleaning out their closets now more that they're home. So it's actually the tonnage is going up. And I'm not guilty, I guess guilty of that too. So, even though I did the equation, one of our joint meetings last year, it worked out to 500 and something thousand valued house would want it, because it saves the ratcheting effect of the increase in the overall property rate. So, and the fee can be adjusted up or down without raising property taxes. So I would ask, I guess, either FinCom or the Board of Selectmen or Tom. I think that's something we have to entertain and implement, because it's a fee, it's not a tax, and we can only do it so much. If it's $300 a year, or $311 on that chart that you were referencing, Jim, that's what, $25 a month. So we can adjust that down or up per year, or start low and work our way up. So I think we should go into the budget thinking we are going to charge for trash, because it's an expense we can control. expense we can't control, but it's a revenue source we can. And it will offset some other stuff that we can use some funds for other things.
It's, David, it's an interesting discussion. It's also various forms of how it can take place, whether you fully fund the program, you 50% the program, 25%, how you want to handle it, how you want to bill it out. It's an interesting discussion, but it does have community, a lot of community input. Trust me on that.
Okay. Yeah, I think we spent more time on leaf pickup last year than a lot of other topics. So those are my thoughts, and I'll again thank you. Thank you all for the work.
I want to piggyback on what David said a second ago. I think that I've been around a long time, a little longer than David. I've never seen a school increase of 3%. So I think in terms of, and they're 54% of our budget and rising. I'd like to see the subsequent projections saying, okay, if it's 3%, everything else being static, here's where we stand with the deficit, et cetera, 4%, 5%, 6%, 7%, 8%, 9%. Because at some point we're going to be really scared, and we should be. And so I think using 3%, I think is a very unrealistic assumption, even though you didn't use my words, highly aspirational, but we've never had 3%. And I think David just mentioned a minute ago with COVID-19, additional expenses, it's likely to be more than it otherwise would have been without this COVID-19. So I'd like to see a little more realistic budgeting, certainly in the side of the schools. If we can get it down 3-4%, we should congratulate everybody. But meanwhile, let's make sure we're looking at realistic numbers.
Yeah. One thing, Mr. Chairman, both chair, I'd like to say, in just my limited time of my 8 days here, at least on the general government side, we are staffed very thin. I mean,
Agreed.
yes, and I'm sure you're all aware of that. And it is difficult for us from just looking at this to say how we can sustain it if we're seeing increases on the school side reaching 10, 11, 12%, because we have services that we need to provide to the residents of Wenham that are on the general government side, and reductions in services can be difficult. The other aspect of is we can't keep doing overrides. I mean, overrides, bonding agencies like overrides because it shows that you're taking care of the community. But to the public themselves, you're taxing the public year after year at a higher rate. Though it may be going to find services and good programs, there comes to a point where affordability becomes an issue.
That was my big point last year too, and I know it's tough for you guys too. It's like no good deed goes unpunished, right? You do all this work and all we do is poke holes in it. But I don't know, Tom, I just met you, but I've been for years. I usually just pretty pragmatic and very thankful for everyone's work. I think I agree with you, and I made that point last year. We're getting to the part of our tax rate where we are making ourselves hurting property values of our houses. So it's why, as a proponent for trying to get the school on track is probably not the right word, but get that a little bit more cemented. And then, like you said, find ways of revenue that don't increase the tax base. I think it sounds funny, but I think trash is one way to do that, because I think last time the fee was $400 and something thousand. It's going back a few months. Every day's Wednesday in COVID, but I think our fees were around that. So if we can cut that by a percentage and not raise taxes and not raise fees. My point was, when you go on Realtor or you go anywhere to look at, it shows what your taxes are on the house you're looking at. It doesn't show the fees. So that was another way from a marketing standpoint.
Susan, you
So
want to?
I'll get off my soapbox
I want to make
now.
a comment back to the schools. I agree that we've never had a 3% increase. That probably is not a number that is realistic. However, I think it's important to put on the table to the schools of where we're at. and what our demands are on our own budget, and start at the 3% and tell them that. I did have a meeting with Carrie Jelsma and the superintendent and the business manager. And I put on the table that an override is very, very difficult for the town of Wenham this year, and we would like to work against that.
And how did that go?
It was accepted. I mean, they didn't make any, obviously, weren't able to make any promises, but it was put on the table that the appetite, if you will, for an override has been diminished significantly. And I think it's important to let them know. We're meeting with them next week, and I think it's important to put on the table, this is what our assumptions are at this point, and going forward, this is where we need to really kind of look very hard at how we make our budget work for the town of Wenham.
I agree. I think last year we were told it's a different management there, superintendent, Jim, right? And finance, they said last year this was the year where we're putting everything into the budget. A lot of repairs are getting done. And then this year was supposed to be a little bit better, but we'll see. I get your point though. Tell them this is where we are and this is what we can afford, but
there's also a tricky, and Alex, I appreciate your thoughts on this as well. There's also a tricky, if you will, issue with remember last year they were anticipating a $1.2 million reduction, 20% from the state.
Right. Yeah.
They in fact recovered from that 1.2, $800,000. Now that $800,000 has not been, it's been part of their budget, but they have, what was explained to me is it has not been expended in this year's budget, this year's current operating budget. How that money gets put forward is a discussion that we would have to have some detail with the school committee.
And it plays out over a much longer term as well, due to the timing of free cash certification or E&D certification. So, right, the E&D that's expected to be, I'll call it a windfall or significant increase to the regional school district as a consequence of the surprise state aid after the expected reduction and the lack of, expenditure appropriations for that money means E&D down the road, but that's a bit down the road. And I think we'll be talking about that a fair amount. I do have a number of comments and questions, but Susan, did you want to make some first and then I'll go?
I just have a question. Jack Wilhelm referred to the tax rate as $18 and change. I think it's quite a bit higher than that, if I'm not mistaken. It's closer to $20.76.
Yeah,
Am I
it's
correct?
it's over 20.
It's mid-20s estimated for FY21. I mean, 1894, I was thinking the same. I checked my notes when you mentioned that, Jack. It's not wrong for what we have certified, but with the passage of the overrides in over the summer and fall and town.
Yeah, but
meeting,
what is it for FY21? That's what
I don't know that has it been slated yet? I mean, Jamie, Jackie, and Tom would know for sure, but we were expecting, I believe, about 2060 was the expectation, I think.
2054, I think, was the number that I remember, right?
Okay, so Jack Wilhelm, just so you understand, it's $20.54.
I heard that.
Yeah.
No, it will be that. It's not that now, but it will be that, right?
It is that now effectively,
It is that
but
now.
because of the lag of the certification of the rate
All right.
and the implementation of the taxing of our residents is a lag.
Well,
We're there.
We're headed to 25, and that's the absolute positive maximum.
Could well be. I'll move through a couple of.
It is well be. It's a state law. You can't go above 25%. 25.
For sure, I totally agree. I meant we could well be headed there in terms of where we are directionally.
And unfortunately, the way how we're set, we can't split the tax rate. We can't do a different rate commercially because we don't have a commercial base. We don't have an industrial base.
That's right. We only have one tax rate.
Yeah.
So
You got other questions, Alex? Why don't you go ahead?
yeah, quite a few. So, but I'll move quickly, I promise. One of them was the tax rate, so we can check that off. With respect to the overall presentation, thank you very much for that, Tom, Jamie, Jackie. familiar themes versus the past few years. How do we get to a balanced budget? But the answer is we don't. We've had 3 straight years of overrides, FY 19, 20, and 21, 330,000, 600,000-ish, and then we were at $1,085,000. Of course, I guess we brought it down a bit this past year. So not only are we continuing on a trend, but where it's exacerbated year after year. So let's just pause for a second and realize why. It's because we don't have the levy capacity. So the words excess levy capacity should be nowhere in our presentations as far as I'm concerned. There's nothing sanguine about it. Excess levy capacity would be nice, but it's not our reality. So if our levy capacity increases through 2.5, about 400,000 a year, and then you add to that about a couple 100,000 new growth, whatever, it's about 600,000 increase in levy capacity every year. Take the schools, for example. It's half our budget. Call it 12 million bucks. We know 3% is not reasonable. It's been triple that. It's actually quadruple that to start last year. 12% came down sub 10. Not picking on that. I'm just saying real deal numbers. Call it 5%. I think we would be, well, I'll just say it because it doesn't matter. The cards on the table are 3% to show what we can and can't afford, more so the latter. But if it were 5%, what's that? On 12 million, that's 600 grand. There goes levy capacity. It's gone. So the story is, it's obviously residential tax base, as we're all well aware, but our levy capacity gets chewed up all too quickly. So I can appreciate that the 650 of structural deficit at this stage is better than where we were before, but we need to be really careful on expenditure because revenue projection, revenue expectations, I don't think are that we're going to squeeze much out of any rocks. On the revenue side, one comment about Iron Rail, which was discussed a bit. I think it's really alarming that we're projecting a $100,000 shortfall. We talked about this in our last FinCom meeting. This needs to be resolved. We need formal written agreements with all tenants, which state nothing other than here is the plan to get back on track and pay every single dime owned to the town. If not, we're all basically complicit in subsidizing private businesses at the expense of town residents. I am one of those residents who actually paid one of those larger businesses for, dog care services recently, had a great experience. But we can't, this is not residential. This is commercial real estate. Nobody makes friends. It's high risk. When you don't pay, generally speaking, a padlock gets put on your door. Now, that said, I can appreciate that the businesses like all were absolutely devastated by the restrictions. And I'm not trying to say it's easy for them, but it's not fair to other businesses, as was pointed out by Susan. It's also not fair if another business wants to open a dog service and is ready to go, saved up the money, is ready to go. We run the risk of no revenue if we shut off the lights, but we cannot continue in a position of, they want to pay and they're going to try. That's unacceptable.
That's right.
I think.
Are they
I
under
agree.
any, I'm sorry, Susan. Are they under any type of formal payment plan?
No.
We have formal
Yes.
lease agreements, but
Yes,
no formal
yes,
payment plan.
They all have a lease.
They all have a
agreement.
lease, agreed.
But not a formal repayment plan, John.
Yeah, not a repayment plan.
Not with the deficits that they've incurred for March, April, May, I guess it is. So that is what we're addressing immediately. And there'll be an update for that for you folks all by next week. I guarantee that.
Great. And by the way, I know that there's a personal element to this, a personal dynamic wherein, John, I know you've done a lot with and for the Iron Rail. I appreciate Lou's efforts too. As a volunteer, I would not be a good commercial landlord. And I don't think any volunteer who's going to be in a friendly position is going to be a good commercial landlord who's more apt to slam a padlock on a door. It's not pretty, but the reality of it is that's generally how it works in commercial real estate. If I have a restaurant and I don't pay my rent, I can guarantee you I'm kicked out
Having
tomorrow.
managed one for 30 years, I understand that.
Exactly. You know this well.
But some of half a loaf is better than no loaf, because if you padlock the door, you got nothing. So you still have a building that you have to maintain, and you still have utilities that have to be paid. So, and to refill that building, I can guarantee you, it will be a very hard slog. I know, because I'm the guy who put everybody in there about 10, 15 years ago.
Sure.
But John,
what we don't know is if there's another, there could well be, honestly, down the street from any of us, another person who's saved up and who's like, I just wish there was a place to open a dog business, because dog businesses are booming right now. My dog gets picked up 3 days a week and dropped off. It's beautiful.
I'll be the first one to say, let's put a for rent sign out on the street.
And I hear you. And I'm not suggesting that that's necessarily the way to go. I realize the alternative is zero income, a net negative with the cost of keeping the buildings running. But we do have to recognize the reality of the cost to the town, because we have for the past several years identified and praised Iron Rail and everything along with it as one of the few bright spots, especially with respect to agreements with these fabulous businesses. Thankful that they're doing their business in the town of Wenham. And with rather modest at times accommodations, have stuck with us, paid the bills, provided great services, and we want to maintain those relationships. So I'm not trying to be overly harsh, but there is an impersonal element to this, because it was probably the foremost bright spot financially to the town of Wenham that we're now major declines. That's all I'm going to say on that. I apologize. I know I went off of that.
That's fine. No, I fully understand. As I said, I ran a very large commercial industrial property for 30 years, and there were tough times, and it never made it fun or easy, but we got through it, because you have to take the good with the bad. And this property particularly has some challenges because it is so far removed from, the main thoroughfares.
Sure.
And to put some other type of business in there. At one time, I found a school that was willing to go in there. I could not get the support from my counterparts to put the school in there, and they would have been a long-term player. And all of this detail would not even exist today, but.
But
as part of the discussions that we had, there was discussions about grants and foundations. I did a little research, and I'll send this along to you.
Please.
There's a quasi-public corporation called the Mass Growth Capital Corporation.
Mm-hmm.
They have given out grants to small businesses. They ran out of their money, but I understand in the state budget, there's another $17.5 million to be allocated in small grants. Maybe we could pass that along.
Absolutely. Absolutely.
So they could at least apply and see if there's any opportunities there.
Will do. Thank you so much. Any other ideas? And again, I have no problem putting a sign out on the road, for rent, or advertise it in some other means. So if we can find somebody, I would be happy to deal with that.
All right. Let me make a comment here. I think we need to stick it to the big picture here too, that, as we went through the slides and all these comments here, that we're really working on the fringes of money compared to the full size of the budget. So I think the key point is that we need to go in to the meeting next Thursday with the schools with a realistic understanding that, for several years, my impression has been that we've budgeted very tight, we've been scrutinized and pared everything down. And we need to make sure the department heads don't feel too much pressure to constantly do more and more and more with less or at a level budget. We need to be true on our numbers as to what it really costs to run the town, and then take those numbers over to the school and say, look, school, you really have not done a comparable effort to trim costs or control costs, because you're putting us in a position where we are right down to their bare bones, and we really want to see you do the same thing so that we can control some of these costs going on, because obviously the revenue increases are not going to be there, despite what prior school committee members wished. So I think we need to make sure that the department heads understand that they need to put a true budget of what it costs to provide the services. Yes, we'll look at trash fees, but I think we all understand that the only real area to control cost here going forward is the schools.
Mr. Chairman, two responses to your comment, and I fully agree with you. First of all, you have to deal with the 800-pound gorilla in the room as it is, not as you wish it was. Secondly, year after year, I have watched us squeeze and squeeze and squeeze our departments and see how much less we can skin off the bare bones that exist. And then each year they look at the increases to going to the schools and they say, why did we get squeezed so hard? It is very demoralizing to our employees to see this kind of retribution that plays out year after year after year. And this is not just 10 or 15 years. This goes back probably 20 years now.
I agree. I think it's tough with the schools because, the debt payment went right into the school budget. The athletic fees 2 years ago went right in. The expense level of the school budget is not going along with what the town can do, taking outside of transportation costs and things like that. I think I'm curious to see what the next school budget is going to look like.
I'm hopeful for the next school budget, but to date, their talks, especially last year and the year before, were centered upon very marginal things. Like when you get down to it, the school fees, that's something like $100,000 over a 30 million plus budget. Whereas on a routine basis, they've been spending over $400,000 a year on photocopiers and photocopy fees. They have not looked at the internal operation, and I think we need to insist that they do so.
And that's, you raise a good point, Gary. I mean, my company went paperless years ago. Nobody prints anything. There's no paper anywhere. And this is a large financial institution. Schools could do the same. My daughter's in the regional, has an iPad, this and that. Along those lines, we should be asking for what are the cost reductions? We talk about, and was mentioned earlier, cost increases due to COVID, obviously unexpected, but there should be associated. I would expect that paper cost, those copier cost, services, new hardware, et cetera, is plummeted because it shouldn't be needed. Because I know we're not using any paper. But if I can just make one comment, just to bring it back, and if the chairs will allow me, to the big picture for what we can control within the town. Obviously, we're on the receiving end of the school's budget. The one other comment I was going to make was with respect to free cash. I think that we're tenured on the boards and committees and understand that the desired and suggested best practices from a municipal budgeting standpoint are to use it for one time only. And we get that. We've done better in that regard. Where we were using 750, we're now using, or have used 500. So we were to the tune of $750,000 using free cash, regularly every year, and reduced it by significant margin. I think it's a lofty ambition to go to zero, in light of the fact that we had a 9% tax rate increase year over year, and we're passing on significant increases to our residents. So back to my earlier comment about excess levy capacity, where none exists, every dollar that we use of free cash is of course a dollar less for the override, net neutral. Jackie's now going to correct me.
I'm not. No, I'm just going to agree with you. The one thing I just want to remind both boards of is that when we're talking about, not plugging in any dollar for free cash in what we presented to you tonight and using the 3% for the schools, these are our initial assumptions. The 3% comes from the fact that we have a 2.5% increase every year that we're allowed to do under Mass General Law. And I think, we were using the phrase for a long time with the school budget about sustainability. But at this point, we're just trying to show what the affordability is. Jack brings up a really salient point that, people look to the tax rate. They look to the tax rate increase every year. And it's hard for us to calculate the tax rate because we're trying to estimate local receipts in a pandemic and trying to get a sense of where the school's costs are going to go. So I think what we were really trying to do is get a base assumption of affordability of, we didn't want to start with plugging in free cash. You want to start with the assumption that you're not going to need that one-time funding to fund your operating budget, knowing that, as Jamie mentioned earlier, it's going to be she's estimating $975,000, $250 off the top we put in our reserve. But so there is free cash, as we go into this process. But, I think it's not so much talking about the sustainability, but the affordability. And for all of our other departments, we start with those assumptions of what we can afford within the natural growth that occurs every year, which is limited. So I think, as the next couple of weeks come through, we will have binders for you for the January 9th meeting for folks to pick up in advance and take home. And as we get into that meeting, usually it would be in December, it'll be in January this year. But that is where we will start to see what we hope to hear from you about where the department heads are, your comments on that, and where we want to start plugging in free cash, or if there's capital that we feel like we have to prioritize. So I think in January, on that 9th day, we'll have a really good sense too at that point of what kind of net impact we'll see from the enrollment shift, and the schools will have a preliminary number for you all to review. But I think we just wanted to get, the conversation going of where we expect our costs in particular to be, recognizing that last year the schools started at actually was 14.9% during this first meeting. So hopefully we won't see that number again. And it did come down under 10. But these are assumptions. They're not things that we think we'll be sticking to. It's just a way to get us started and get the ball rolling, which
Get the ball rolling. Yep.
tonight
I appreciate
to
that.
let you
Thank
guys
you.
get started speaking and bouncing
Good
your
job, good job getting the engines going, Jackie.
I know I never have to get any of you started on this discussion, but it's just good to hear your discussion for us too.
Just a note on
Especially-
the free cash, the auditors made a note that we're all aware of, that the healthier your reserve account, your bond rating is improved, and we save money on our bonding expenses. So that's one thing. I do want to say, back to the school challenge, that what the gorilla in the room for the schools is the 766.
Yep.
Last year, they had a significant unanticipated cost in 766.
Yep,
So I think that-
unfunded mandates, got it.
Yeah, it's a significant mandate, and they've been trying to reduce those costs by bringing services in-house. But that, I think, is something we'll have to, they'll have to explain to us and see where they're at, because that drives their budget as well.
All right, so a schedule going forward, we got the Board of Selectmen meeting on the 15th. One's next FinCom meeting,
16th,
16th, and then the joint on the 17th.
yeah.
And I've been in conversations, the 17th promises to be a very large Zoom meeting. So Sean from Hamilton and Michelle and I had initial talks about how to actually handle the meeting. And I think we're moving towards some sort of round robin that, the presentations made, and then invite comments from, one body, whether it's, Hamilton Board of Selectmen, and then invite comments from the next body, so that each of the bodies and each of the individuals within that body have at least an initial opportunity to speak, and then we'll see where it goes from there.
Yeah.
The five
Thanks.
families.
Yeah.
Thanks, Gary.
Um,
I'll take, what I was going to say is that I'll take the information from tonight and from our FinCom meeting next week, and I'll put together my speaking points.
Sounds good.
What's important and represents the BOS and the FinCom. And make it very brief. I also want to say to this group that I've had several discussions with John Prulidge, who is my counterpart, the FinCom in Hamilton. We'll be discussing on the morning of the 17th by phone where they're at, and he wants to know what the strategy is. I think this, quote, strategy, if you will, is to present our budget, present where we are, what our requirements are going forward, and listen to the schools. I think that to have a depth strategy discussion is premature. We're really just at an exploration stage.
Jim, Gary, and all other board members, in my experience, the discussions that we're having tonight are no different than the discussions that I've had elsewhere. You just take the town of and fill in the blank for the town. Because unless you're the city of Cambridge, or you can say, thank you, Natick Mall, these are discussions that are happening statewide. So don't feel that you're alone. We're a little unique in certain situations, but these discussions are going across the Commonwealth the next few months.
Yeah. Thank you, Tom.
Gary and
Anybody else
Jim,
have any last words?
Gary and Jim, can we also just do a reminder that we're going to be doing the January 9th meeting via Zoom?
Yeah.
And so can folks just give Jamie and I a show of hands of who would like a physical budget binder?
I would.
Okay.
Menzie,
Expect the entire select board would.
yes.
No,
Okay.
I can have mine
Susan.
electronically, it's okay.
I'm fine with electronic also. Along those lines, I never thought of that. Is it in Excel format or PDF, or how is it?
We'll give you one PDF and we'll set up like a Dropbox or something so you can download it, because it'll be a good sized file, maybe a couple of parts, but it'll be PDF.
I'm fine with electronic.
Electronic.
too.
Thank you.
Anything else? So Jim, you want to adjourn your meeting first?
I move that the FinCom adjourn our meeting at 8:11, December 9th.
Second.
I'll second or third it.
And resume.
those
So
in-
you need the vote roll call.
All those in favor, the roll call. Aye, Jim.
Alex,
Hi, Susan, Alex.
Hi, David.
And the Board of Selectmen will adjourn at 8:11 as well. Do I hear a second?
Second the motion.
And roll call vote. John,
Aye.
Jack,
Aye.
Gary, aye. So we're all adjourned. Thank you very much, everyone.